And what generative AI has to offer to venture capitalists with Race Capital general partner Alfred Chuang. That's next. This is Bloomberg. Time now for the VC Roundup. Let's start with Devon, the pioneer of the shale revolution that reignited US oil and natural gas production. It's now getting into geothermal renewable energy. A $10 million investment into geothermal startup Fervo Energy. And over in Europe, venture capital firms are on pace for their lowest year of funding since 2015, as the weaker stock market, rising interest rates, is causing larger institutional investors, LPs, like pension funds, to pull back in the VC space. Let's bring in Race Capital general partner Alfred Chuang for his read on the VC landscape here in the US, in Europe, and globally. You issued this rallying cry in the pandemic era. You wanted your founders and CEOs to be more active, do more. You wanted your industry peers to do more. And then the world sort of fell apart. Higher rates, the war in Ukraine. Where does your rallying cry sit now?
Ed, good morning, and very good to see you. Thank you for having me back. Most definitely, I think this is an economic environment that clearly is for investing, is not for the faint-hearted at all. I think we have seen VC funding for startups dropped over 50%, down to $76 billion in the first quarter.
That was globally, that figure.
That's globally, yeah. Yes. And then we saw all the SPAC deal, the whole frenzy went away. We also saw the IPO market is at an all-time low. We also had Silicon Valley Bank went under after 4 decades of service specifically for our industry. So these are huge monumental impact that we've seen in the industry itself. So it's a tough time, yeah.
I'm really interested on the relationship between the public and private markets, but also how you follow the same data sets that a public market investor would be. So today, one of the stories is Fed speak. James Bullard of the St. Louis Fed saying actually more hikes. So if you think about an inflation regime, a hike regime being there for longer, how does that impact the mindset of a venture capitalist?
So obviously it has an impact. Clearly it will have an impact on the valuation. So if you look at very late stage deal, like Stripe is now down 30% during this time. So we have to expect late stage deals. When its prices goes down, it will trickle down all the way to the earlier stage deal. The impact to the deals that my team and I at Race Capital are involved in are very early stage, seed and pre-seed. In those particular kind of investments, the impact has been a lot less because people are still very hopeful to look out a much longer period of time horizon for technological innovation.
So we've discussed that contrast on the program. Pretty dour, broad outlook from VCs, a lot of excitement about the seed and pre-seed stage. Is it just simply because it's easier to write a smaller check and not lose as much sleep over it?
And actually, I don't think that's the case. I think actually it has a lot more to do with the thesis itself. If you look at what we do, because we're so early, we have to look out for the kind of company and technological innovation. What will happen to them? What impact will they have 10 years down the road, or sometime even longer? So for that, downturn has always been proven. I mean, I myself have ran large companies, tech, public company, during up and downturns. There's no better time to invest in early stage things for new invention, for the outlook of how our world's going to be evolving to 10 years down the road.
Artificial intelligence. How many times a day do you say the words artificial and intelligence at the moment?
Our offices in Palo Alto, not enough. Every street corner, every conversation at Starbucks, every conversation in an office, everything is about generative
You're
AI.
Investing in the area.
Of course, we are, yeah.
And how do you invest in the area?
So we have specifically focused on the impact of this level of generative AI for automation in the enterprise. So we think the biggest opportunity and the safest place to deploy these type of technology is inside the enterprise itself. Large banks, large telcos, pharmaceuticals, governments, those are great places that you can wall in the learning itself and then be able to control and pace and govern how AI will be used.
You kind of have this race between Alphabet, the parent company of Google, and Microsoft, and a person who you may have heard of called Elon Musk wade into the middle of that. Yeah. What do you make of Elon Musk saying, you know what, I'm going to enter the AI race?
Yeah, I think this will be something very difficult to end. You just think about this, right? Put it in context. We have not seen a disruptive technology like this since the late 90s, how the internet has done to companies. Remember what had happened to Microsoft? They were behind in the browser war. So this is even bigger. We saw Microsoft gone out to do a deal that's $10 billion plus with OpenAI, a company nobody heard of until last year, right? So November. Okay. So think of this context, and now they're using this to disrupt Google, which has a franchise that's been going on forever on search, worth $1.3 trillion. This is the only time we've seen little company now have a chance to impact and make huge impact in the innovation of large companies.
We've